Hi, I'm Ava Makina, and this is the Coin Daily. Here are the headlines. Strategy considers a Bitcoin sale after $12.5 billion in losses. Coinbase cuts 700 jobs and shifts focus to AI. Bitcoin jumps above $82,000 on U.S Iran agreement reports. In other news, U.S Iran peace progress sends oil prices down more than 10%. Tether posts $1 billion profit amid market volatility. We begin with this. Strategy, the software company best known for converting itself into a Bitcoin holding vehicle, is now openly discussing the prospect of selling Bitcoin after reporting a $12.54 billion net loss for the first quarter of 2026. That loss was driven by a $14.46 billion unrealized decline on its digital assets as Bitcoin prices fell sharply during the quarter. As of May 3rd, the company held 818,334 Bitcoin with a market value of $64.14 billion. The shift matters because it breaks from Michael Saylor's long-standing line that Bitcoin is the exit strategy, a stance that came to define Strategy's never sell posture. Executives have now said they would consider selling Bitcoin if doing so improved the company's capital structure or increased Bitcoin per share, one of the company's preferred measures for investors. That change carries weight because Strategy's model depends on financing, preferred stock obligations, and market confidence around its balance sheet. Ultimately, the fact that a sale is even on the table marks a real shift toward contingency planning in Strategy's treasury approach. Now to Coinbase and a major round of job cuts as the exchange shifts more resources toward AI. Coinbase is cutting about 700 jobs, or roughly 14% of its workforce, as it restructures around AI and tighter cost control. The company says it will flatten management to 5 layers below the CEO and COO, shift to smaller teams, and rely more on automation. Most of the reorganization is expected to take shape in the second quarter of 2026. Coinbase is also budgeting $50 to $60 million in restructuring charges, and the message here is straightforward. This is not just another crypto downturn layoff round. Coinbase is using AI as part of the case for a leaner org chart and fewer people. The bigger takeaway is that one of crypto's largest public companies is treating automation not as a side tool, but as a reason to redesign how the business is staffed. Up next, Bitcoin, moving sharply higher with BTC jumping above $82,000 on reports of a U.S Iran agreement. Bitcoin broke above $82,000 on Wednesday after reports of progress toward a U.S Iran agreement triggered a rebound in risk assets. The move wasn't just a modest uptick. Bitcoin hit a 3-month high, clearing a level that had capped price action for weeks. Oil prices dropped sharply at the same time, which contributed to broader relief across risk markets. But what stands out is that Bitcoin's breakout landed right as pessimism had built up in the derivatives market. Many traders had positioned defensively, expecting more downside, and when the headlines hit, the forced unwind of short positions helped propel the rally even further. The question now is whether this will prove to be a durable shift or just a headline-driven spike. Derivatives liquidations can push the market quickly, but lasting upside depends on real spot demand. Market data now puts $80,000 as the first key support zone to watch after the breakout. If buyers keep stepping in beyond that first liquidation burst, the move holds. But if positioning gets too crowded without new spot interest, volatility can return just as quickly as it faded. For now, the key point is that a geopolitical catalyst sparked Bitcoin's rally, but the strength and durability of this breakout will depend on follow-through from actual buyers, not just short covering, over the next several sessions. Now we turn to the Strait of Hormuz and the energy markets, with oil sliding more than 10% on signs of U.S Iran peace progress. Oil didn't just drift lower today, it repriced fast. U.S. crude benchmark WTI fell more than 10% after reports that the United States and Iran had made progress toward a memorandum of understanding aimed at easing hostilities and addressing Iran's nuclear program. Why does that matter? Because traders had been pricing in the chance that military tension could threaten traffic through the Strait of Hormuz, one of the world's most important energy choke points. The strait links the Persian Gulf to the Arabian Sea, handles about 20% of global petroleum liquids consumption, and accounts for roughly a quarter of seaborne oil trade. So the move tells you something bigger than one volatile session. A large slice of oil's recent premium was geopolitical, not supply disruption that had already happened. The moment the threat looked less acute, that premium came out in a hurry. If tensions keep easing, oil could stay under pressure. If they flare again, that same risk premium can snap back just as quickly. And turning to Tether, the stablecoin issuer is reporting a $1 billion profit amid fresh volatility in the market. Tether just posted more than $1 billion in operating profit for the first quarter of 2025. The company tied that result to steady income from its traditional investments, with nearly $120 billion in U.S. Treasury exposure serving as the main driver. Its quarterly attestation, completed by BDO, also shows a reserve mix that includes gold and secured loans, alongside a substantial buffer above liabilities. The bigger takeaway is what that says about USDT itself. Because USDT is core market infrastructure, Tether generating strong income from liquid reserve assets during a choppy quarter matters beyond a single profit figure. And the more concrete angle here is the mix. Tether says gains from gold and income from secured loans helped offset crypto market swings, showing this quarter was not driven only by higher token prices. All eyes now on whether strategy turns talk into a real Bitcoin sale after that $12.5 billion drawdown. And that's where we leave it tonight from the Coin Daily. Ava here. Where exactly did Tether's $1 billion profit come from during this volatility, and what revenue stream mattered most? That's your daily market close from the Coin Daily. Subscribe and ring the bell so you never miss it.